All right, so if you own a business, you're doing some contract work, the IRS has just increased the penalty fee for underpayment of taxes. So what this means, I'm going to cover this in detail in this video, but if you're a contractor, you have an LLC, you have an S Corp, and you have to make these quarterly tax estimates, even if you have like a gig job, right? You're doing, Uber driving, or if you own an Airbnb and you got profits coming in, you have to make quarterly tax estimates. And what the IRS said recently is they're going to increase the penalty for those that don't make quarterly tax estimates. And that penalty could be a lot of money when you do your taxes next year. So I'm going to get into the details. I'm going to go through a couple slide presentations. And then toward the end, I'm going to show you a tax return to see how all this kind of works. But again, the penalty is going to go up to 8%. So if you have any questions, leave them in the comments below. Thanks again for watching. All right, so here's the presentation. I just got 5 slides I'm going to go through here. And I just want to stress this penalty has been around forever. It's just the IRS is increasing it from... Okay, so here I'm going to go through 5 slides. This is slide number 1 here. And again, I'm just going to kind of go through this penalty. I'm going to keep it very high level. And at the end, I'm going to go through a tax return to kind of show you how all this works. If you're a client of ours, I bring this up every year, every quarter. We have some clients that understand the rules, but they'd rather pay the interest and penalty. Or some have a mentality of thinking they'll make more in the market versus making the quarterly payments. So here's the penalty. It's 8%. So who does this apply to? So if you're a business owner, right, this is the big one here. So if you own an S corporation, you own an LLC, whether it's 1 member, 2 members, 3 members, 100 members, sole proprietors, right? So you have a Schedule C on your personal tax return, right, every year, or you're a consultant, right? You're doing some side projects, contract workers, gig workers, right? Uber drivers, Lyft drivers. You own a couple Airbnb places, right? This is where you're getting money, okay? You have some expenses, but you have a profit. You're showing a profit, and that profit is subject to income tax. And what the IRS says is, all right, there's no one withholding this, so we want you to pay this every quarter. And if you don't pay it, we're gonna assess this penalty on you of 8%. This also applies to employees that get a W-2, but specifically those that get a bonus or stock options. And the reason why this becomes a factor is companies default to a lower rate when they pay out the bonuses than what your marginal tax rate is. And I'll explain this to you after these slides. I'm going to show you in a tax return. So just say you're in like the 37% tax bracket, right? But your bonus gets paid out at 20%, you're under withholding here, which means that you should have paid more when that bonus was paid out. And the IRS says, you know what? We're going to assess a penalty here. So that's why it's very important. And I'm not saying this because, I'm a CPA here, is you got to meet with your CPA on a quarterly basis to kind of review all this, because these penalties add up very quickly. So this is the who. Next slide is the what. So effective October 1st, the IRS is going to charge an 8% interest on estimated under tax payments. Okay. This penalty was 3%. So they increased it 5 percentage points. Okay. So it's big. It's going to add up very quickly. Now, if you owe a balance of less than $1,000, they're not going to assess any penalties on you. Okay. So this is the what, and this all came out recently here. Next slide. Why? So if you're an employer, you work for a company, you get a paycheck, right? Every paycheck, you notice that there's taxes being withheld, right? Because your employer is withholding taxes, so they're taking taxes out of your paycheck and they're paying them to the IRS on your behalf, okay? Because you told them to do that. But when you own a business, right, there's no one taking that tax payment out for you and paying it for you. You're the owner, you got to pay it, right? And the IRS says, we want to see these payments every quarter, okay? We don't want to wait till the end of the year. We want to see these payments every quarter. So the quarter payments, if you want to mark your calendar, Q1, which is the period January through March, that payment is due April 15th. Q2 is April and May, and that payment is due June 15th. Quarter 3 is from June, July, and August, and that's due September 15th. In Q4, it's September through December, and that's due January 15th. So mark your calendars. You don't want to miss this. Now, how, right? You want to avoid these penalties. So, and again, this is going to make a lot more sense when I show you this tax return. But if you pay 90% of the tax due during the year or each quarter, you're not going to be assessed a penalty. Okay. If you could, so that's one approach, right? The other approach is you look at your 2022 tax returns, and if you pay 100% of the 2022 tax returns tax in the current year, then you're not going to be assessed a penalty. Okay. So you could be making a lot more money in 2023, but if at least you paid 100% of the prior year's tax, you're not going to be assessed a penalty. However, if your AGI or adjusted gross income is more than $150,000, then you need to pay 110% of prior year's tax in the current year. And again, I'm going to show you right after this slide. This is the last slide. I'm going to show you a tax return here, and it's going to be make more sense. You can Google this form. It's tax form 2020, so 2210. It essentially kind of calculates this penalty. Okay. And the IRS actually has a withholding calculator, and it's actually pretty good, where you can kind of figure out, all right, how much tax should I be paying this quarter? And you put in different amounts of what you made during the year or made during that quarter, and it will tell you you should make a payment of this amount. Now, this whole presentation is on the federal side, the IRS, because they increased this. Remember, you're going to have to do this on the state side, right? So if you live in a state, work in a state that has income tax, you're going to have to do quarterly payments as well in that state. So this is the presentation. The last piece of this video is I'm going to walk through a tax return. I'm going to show you an example. All right, so this is the last piece of the video here. I'm going to walk through a tax return. We're going to play around with it here just to kind of explain everything. So Ferris and Sloan, their AGI, and this is the 2022 tax return. So you always want to look at your AGI number. Their AGI is $222,000. So that's greater than 150. So when they do that, like 110% look back, that's the key number, right? So there's two factors for them to avoid the penalty. They can at least pay 110% of last year's tax this year, okay? Or they pay 90% of this tax this year, okay? So that's the key figure to determine, what you're going to have to pay. So you can see here they had about $22,750. So this sum of those two was withheld from their paychecks. Okay, and you can see here they have an amount due, right? But look at this estimated tax penalty. That's where you're going to see this penalty pop up here. But you can see here nothing shows for them, and the reason why is this year's tax. So this is the tax due for them. It's never, whenever someone says, what's your tax for the year? It's this line number here, line number 24. This is the 2022 tax return. It's not this here. This is what you owe the IRS, but this is the total tax. So if you take this amount, 25,023, multiply that by 20%, you get $22,520. Okay. That $22,520 is less than what they've paid in. Okay. This is what they've paid in so far through their employer and everything. So since it's less than that 90% of this number, there's no penalty. Okay. Now remember, I mentioned that tax form that calculates the penalty. It's form 2210. So let's go to that 2210, and it's going to show you exactly what I just walked through right now. So here's what their total tax is at line 24. So let's go back to line 24 here. So line 24, 25,023, right? And then 90% of that is $22,521. Okay. So 90%. So if they at least pay that amount, they're not going to incur any interest or penalty. And here's what they paid in, $22,750. What they paid in is greater than that 90%, so there's no penalty. Okay. And this form is actually not going to be populated in the return because they're clear from this. Okay. So that's at a very high level how all this is being calculated. Now, just say Ferris also has a consulting job right on the side, and he made an additional $40,000, right? He was doing some consulting work and he made another $40,000. Now let's look at what's happened with them. Okay. So we're going to go back to page 1 here of the return here. It's calculating. And first we want to look at the AGI, and we know the AGI is going to be a lot more than 150,000. Okay. It jumped. So it's 261. So now we have to always keep in mind that 110% of the prior year tax. Now their tax due is $34,000. Okay. So 90% of 34,000 is a lot more than 23,750. And I'll go back to that 2210 schedule. Okay. So now he's going to be assessed this penalty, $235, because what he paid in tax here, or what he paid in tax right here, is less than 90% of the total tax due this year. And as a result of that, there's a penalty. Now remember, this is 2022, okay? The tax penalty in 2022 is 3%. The IRS has increased this to 8%. So this number is going to increase, right? So let's go to that 2022 schedule, 2022-10 schedule right here. And it essentially kind of calculates the penalty, but you can see right here, 90% of that 34,000 is 30,000. This is what he's paid in. There's a difference, and that's what's going to be subject to the penalty. Okay. So what we recommend, and it's called the safe harbor approach, and you can look at your 2022 tax returns right now, is look at this number right here, this total tax, okay, on your 2022 tax return. And then also look at your AGI number, okay? If your AGI number and you're married and you're filing a joint return is less than 150,000, take this number, multiply it by 1. So just take this number, and that's what your number is. Then in 2023 here, look at what you've paid in taxes, okay? If you've paid in at least that amount, then you're not going to be assessed a penalty, okay? But you could have made $10 million this year, okay? At least you made the minimum, okay? And you're not going to be assessed a penalty. Now, I'm not saying you're not going to have a tax bill. If you made $10 million, you're going to have a huge tax bill, but you're not going to have an estimated penalty. Now, if you made more than 150,000, if your AGI is more than 150,000, take this tax number and multiply it by 1.1 or 110%. And whatever that number is, look at what you've paid in. And if you paid in at least that amount, and if you made more than you did last year, you're not going to be assessed a penalty. So that's kind of like it's called the safe harbor approach. Okay. Like I said, I'm not saying that you're not going to owe anything. You're definitely going to owe some tax, but you're not going to assess this penalty. And that's the whole purpose of this presentation, is this estimated tax penalty. The IRS has more than doubled this. It went from 3% to 8%. Okay. That's huge. And we know a lot of people that don't pay these quarterly tax estimates, and because they think they can make more money in the market or in their savings. Well, 8% is pretty hard to do. And this is kind of like a new reality here. So if you have any questions, let me know. Thanks for watching.